being possibly a wolf in sheep's clothing, according to Viceroy. Do you agree?
Fifi, it's not really for me to agree one way or the other. I certainly believe that where there's smoke, there's fire. It's not merely there to conceal the fire. And Viceroy has come out to say that possibly 11 billion of the loan book is going to need to be restated or written off, which is a big number. It's 1/7, 15% of the loan book. Now that is increasingly worrying for many sectors around the South African economy, notwithstanding the fact that things look to be going so well for the first part of January. This affects confidence in South African investing again, corporates. It's certainly a risk. There's certainly something there. And it seems to be that there is a massive temptation with any corporate that has any lending books associated with a portion of their business, because we've seen it in Steinhoff, and what essentially they're doing, as David said earlier, is they're manipulating their earnings and they're misrepresenting their balance sheet, replacing loans, so essentially loans that have gone bad with new loans is, it's disingenuous, and it certainly could be accused of being fraudulent. There are lots of accusations out there. I did listen to the interview with the founder of Viceroy earlier. And what did you make about some of the things that he had to say? Look, there's definitely something there. Like many years ago, 10, 15 years ago, and I was looking at the JD Group, which is incidentally part of Steinhoff. I was always perplexed in terms of how low their debtors costs were. It's really the cost of their loan book and the write-offs that they did on that. And it's not dissimilar with what they've been accused of at Capitec. You had the consumer under significant stress over the last couple of quarters, and yet Capitec just kept on growing. They're now being accused of misrepresenting their balance sheet and replacing bad loans with new loans or good loans or fresh loans. They've vehemently come out and said that's not the case, and that they've only refinanced loans for clients that are not in default or haven't missed their 90 days. I struggle to fully believe that. I certainly believe there is a story here. There is going to be a write-down. I don't think it's necessarily 11 billion, but it's in the order of a number that is going to be a breach of confidence for South Africa and very bad news for us.
Very terrible news indeed. Well, let's get another perspective on this right now. And Gardner, who's the CEO of Summit Financial Partners, as well as Kokkie, Kooyman, who's the director and portfolio manager at Sanlam Global Financial Fund, and Denker Sanlam Collective Investments Financial Feeder Fund, joins us on the line. Kokkie, perhaps if I begin with you, my in-studio guest, Richard Böttger, saying there's no smoke without a fire. Your thoughts on the Viceroy report?
Yeah, I mean, it is true that the industry from which Capitec started, in other words, one-day loans, sells loans to people who effectively can't afford it if they use it for consumptive purposes, because the interest rates are so high that a lot of the clients get into a debt trap. And you can see that internationally. This is the same in India, in Indonesia, in Brazil, in USA, that your bad debts are always very high. And so there is always a large element of new funding simply to which the client uses to pay off old loans. So that will always be the case. At Capitec, I think the report is very one-sided. If Capitec has evolved from that over the years, it's built up a very large transactional client base. It started the credit card, and it's actually reduced the interest rate on its loans quite a lot as well as it moved out of that higher risk segment. So it is true, you'll always have in that industry high bad debts, but I think they've come through it long enough to show that the way they manage their bad debts, provide for it, have been very conservative. You'll recall African Bank were the opposite. Their provisional practices weren't very conservative. Capitec has always been conservative. The other point that they make is that what was I going to say? The other point was that just in terms of the South African consumer being very indebted. Now, that might be true, but normally that only becomes problematic when your economy suddenly falters or when you have higher interest rates. In South Africa, we've actually got the opposite. I think we're going to go into a growth era. So if we were going to go in an era where South Africa is going to go into a recession, I'd be worried maybe about the report for a bank like Capitec. But now I don't think so at all.
And that's the thing, though, Kokkie, but please stay on the line there. I'd just like to get a perspective from Clark Gardner, who's the CEO of the Summit Financial Partners. Clark, I mean, this Viceroy report saying that because of the macroeconomic headwinds that South Africa currently finds itself in, Capitec has exponential risk of default and, in fact, bankruptcy. Do you agree that Capitec is at that stage and is potentially the next African bank story that is unfolding?
Look, we were close to the action when it was with African Bank and perhaps to a smaller extent with Lewis. And from where I sit, I must emphasize the report seems exaggerated in hype and perhaps is opportunist in riding on the fortuities of the Steinhoff timing. And perhaps, this report is even to an extent reckless in that we're dealing with deposit takers here and a deposit-taking institution. There's no doubt that there are elements of the report that are true, but these allegations have been around for quite some time, and our institutional investors have taken a call on their moral compass or on how they see Capitec in terms of investing. And I think that in this report, the consequences are merely exaggerated. Look, we no doubt have a few court battles with Capitec. It's certainly not to the extent or exactly the consequences are not to the extent as detailed in the report. And I must remind stakeholders that our complaints were fully investigated by the National Credit Regulator, and either they issued non-referral notices or they investigated and said that Capitec, they almost unreferred it from the National Consumer Tribunal in that they said that adhered in all aspects regarding the multi-loan to the National Credit Act. We, of course, being somewhat disagreed.
Clark, sorry, if you just allow me to hone in there on that point with the NCR, because this report is also saying something similar to your complaint, saying reckless lending practices is what Capitec has been doing, so basically, abrupting the laws of the National Credit Act. So what you're saying is Capitec has been cleared of this so far?
Our complaints have been on reckless lending as well as on the legitimacy of the multi-loan, which was a product they stopped in November 2015. And the National Credit Regulator investigated all our complaints and gave Capitec the all clear. We, of course, being somewhat disagreed with the National Credit Regulator, and as a result, we have a few court cases in March, May, June, July, mainly focused against Capitec's multi-loan, but the consequences there are nowhere near the numbers that Viceroy report. And I suppose stakeholders and investors must trust that the National Credit Regulator is right and Summit's allegations are grave at best. So the regulator is there to protect lenders and borrowers from themselves, as well as so that investors trust that what Capitec is doing is legit and fair.
All right, thanks. Kokkie, let me bring you in as well. And now Viceroy is accusing Capitec of predatory finance here. What do they mean by that?
Well, it means it's actually misusing people's financial situation or people who are in need, who are weak, and you're pouncing on them. So giving alcohol to an alcoholic, and in this case, giving loans to people who cannot afford it. Now, I think as was said, there's been a lot of regulations passed in the last 2 years protecting clients against that. And Capitec will obviously deny that they do a financial analysis of their clients to make sure that, they can repay the loans. But it is true, in that industry, you will always have a lot of people who are attracted to those loans, who need it or who think they need it, and who shouldn't actually take a loan like that. But it's quite harsh to say that it's predatory. People come to Capitec asking for a loan,
Yeah. Well, Kokkie, thanks so much for that. We'll leave it there with you for now. That was Kokkie Kooyman, Director and Portfolio Manager at Sanlam Global Financial Fund, as well as the Denker Sanlam Collective Investments Financial Feeder. Richard, I mean, what's your exposure here to Capitec? Are you affected in any way by this, and what are you doing as a result of this report?
Look, I mean, Capitec has long been a market darling in recent quarters. It's certainly, you know, it's expensive by all metrics, but it has been growing. So it has been there's seen some decent momentum in the share price, and certainly it's been an active long in our portfolios. It's not a very high concentration long, and when the news broke, you know, historically it hasn't been a very volatile stock. Certainly the banks have been particularly volatile Friday, Monday, and today, and you've seen a higher beta component, or you know the share movement actually been pronounced of Capitec relative to other banks recently. So that's all a function of the fact that there have been these market rumors. You know, it's prudent to cut the position, or certainly reduce the position in times like these, because there's just an unknown. You know, I certainly do believe that there's going to be some level of investigation, and quite highly probable there's going to be a loss that may not have been accounted for at this juncture, that is going to negatively impede their financials, certainly in the current financial year. You know, 11 billion write-off is a very material number, but you know, it remains to be seen. Certainly, you know, market commentators were found fleet-footed when the Steinhoff story broke. So, you know, it's a big loan book. They've been growing extensively, and it might well be that there has been predatory lending, and that there is a function of the book that's not quite as good as it ought to be, vis-a-vis the way that it's been reflected in the financials.
And I mean, Clark, to bring you back in here, is it just a coincidence that if you look at the board of Capitec and PSG and even Steinhoff, there's so much commonalities there. They sit on each other's boards. You're looking at the situation and you're looking at accusations of governance here. Is it coincidence that you've got these people sharing seats on boards, and you've got these same companies of these boards being accused of malpractice?
Sure. Look, I think that's a stretch. I've dealt with the Capitec board on a number of fronts, and it's mainly in terms of we are fighting or challenging their practices, and we found them very effective and very efficient. They asked questions of themselves. I think that some of the answers could have been answered better, especially around doing good and doing good for society. But in terms of competence and intellect, and a culture of at least questioning at a board level, those tick boxes were ticked. So I'm not as convinced that it reflects on them, or Steinhoff reflects negatively at Capitec at all. I think that's a long shot.